Howdy, lieutenants and economists.
The most volatile, evil, disgusting things on the planet, humans. If you have a video request, you can always go to assholeconsulting.com.
Yeah, I am gonna charge you, kids. And that is the importance of not fucking up.
You are such an asshole!
assholeconsulting.com. Go there if you got questions. Be prepared to give me money, because I'm an asshole and I don't work for free. If you think that's me, then you're mistaken. Dear Cappy, longtime fan and listener, I have a question about what to do with a fair sum of money I've come into. A little on my background. I'm a 23-year-old male with a wife and one son. We make roughly $65,000 combined, with her being a fraud investigator and myself working part-time as a government security contractor. Awesome. I have roughly $750,000 in cash sitting in an S&P 500 index fund. I have been unsure of what to do with it. As it regards the origin of the money, I prefer not to disclose. All I will say is that it did come from legal means. Well, good. I have thought of doing one of three things or a combination. One, start a firearms company out of my home. This is to do being able to work on my home and having only $10,000 to $20,000 startup costs. Well, that's just nothing. That's a drop in the bucket. The state I live in has very non-restrictive gun laws, so there's high demand. 2, buy residential real estate in cash and collect on the rent money. 3, park it in medium and long-term investment funds such as growth stock, mutual funds, IRAs, etc. Looking forward to response. P.S. I wish to remain anonymous. So then I had a couple other questions, because it's not always like, I got $750,000. What do I do with it? Oh, that's it? Well, maybe you buy a gumball or two. Maybe you get a Kia Rio. But otherwise, they'll blow it all away. So I asked, is the money hers, ours? Do you currently own a home? How secure is the employment? What area of town do you live? Do you see yourself living in that town over 7 years? School district, blah, blah, blah. Kid, do you want to have any other future kids? Then he responds, money belongs to me. Currently have a paid off home. So his house is already paid off. Both employments are very secure. He lives near the Phoenix, Arizona area. They see themselves there for another decade, if not longer. School districts are so-so, but they might send their kid to a charter school or a private school. So here's sometimes you get to the point where there are no problems, and it's just like, I'd go take the money and put it in a bathtub and swim in it. So you have your house paid off by the age of 23. It's hard for you to fuck this up now. Now it's kind of more wealth preservation rather than wealth accumulation. Okay, so your goal would be to beat out inflation, maybe get a couple percentage points over it, and you should be all right. Unless the economy collapses or the dollar loses its world reserve currency. That'll never happen. So here's just my general rule of thumbs. I understand a lot of this is insurance investing, which is not investing, it's insurance. So you're not going to expect a rate of return. You could lose money on these investments, but the purpose of this is insurance. And the number one thing is to get some precious metals. Now, I have a general rule of thumb that for each individual, you should have 200 pieces of silver. Okay, now that's like the post-apocalyptic, oh my God, what are we going to use? At least you got silver or something to barter with, and you could start over or at least get to another country. In your case, because you have a certain amount of money, you make good money, you don't have a mortgage payment, maybe 400 for both you and your wife, so 800 total pieces of silver. Some people recommend gold. I just kind of don't like gold because it's not divisible enough. I mean, if the post-apocalyptic world really comes, what are you going to buy with gold? A house? The house is indefensible. So I would just, if you don't have a position in precious metals, I would recommend that. And remember, keep in mind, you're not buying for it to go up in value. You're buying it as an insurance hedge. Now, that's not going to make a dent in your $750,000. I like the rental property idea simply because with rental property, you have some control over the variables and thus some control over what kind of rate of return you get. The stock market right now pays a dividend yield of about 2%. That is jack fucking shit. That's like your savings account or something like that. So if you do your research, and I cannot emphasize this enough, you do your research and you do financial projections, you should, in theory, be able to find a house that provides an adequate rate of return. So you throw down $200,000. The property generates $20,000 a month in rent. These may not be real figures. I'm just trying to keep the math simple. You would say, that's a rate of return of 10%. No, you have property taxes, insurance, and maintenance, so that takes, say, $5,000 out of it. So now you're down to $15,000. Wait, did I do the math? 10, 15, that would be 7.5% rate of return. In other words, I would almost take a class or read a book on rental property management or Schedule E. Learn your Schedule E for rental property. Get financial projections. Get an Excel spreadsheet for rental property. Just search rental property Excel spreadsheet or rental property income statement and learn that inside and out and do some financial projections. You should be able to plug in the cost of your house. You won't have mortgage expense, but then there's there's taxes, there's maintenance, there's insurance. Those will be your big three. There might be vacancy. And for the love of fucking God, 2 major things. Research the fuck out of this, because if you buy the wrong rental property and you get the wrong tenants, you will ruin your life, okay? And your money will go down the drain. I would not buy in Glendale, okay? Don't buy in Glendale. Don't buy on Southside Phoenix, just saying. Don't become a slumlord. Buy property where property values are going up and good people are moving in, all right? You don't want criminals. You don't want illegal aliens. Terribly sorry. Just terribly sorry. Correlation between that and crime. I would say carefree. Was it Paradise Valley? That's almost costly prohibitive. Find good quality neighborhoods where good quality law-abiding people are moving. And if you're an illegal alien, by definition, you've already broken the law. So fuck you. Then you have to screen the hell out of your tenants. Don't just, I know Jim and Jim. No, you screen the hell out of your tenants. Again, read a whole book on how to do it, okay? You get the wrong tenants, better yet, look up tenant nightmare stories on the internet and see exactly what tenants can do. Because remember, the government hates you. You're the landlord. You're the evil capitalist. You're the poor, oppressed little poor people who had 18 children and they can only afford to rent it. No Section 8, none of that fucking bullshit. You find yourself a good quality house in a good quality up and coming neighborhood. Make sure the entire city council is Republican, or the vast majority is Republican. You don't want, we're kind of becoming like a little bit more, we're becoming, was it more blue? No blue collar. No. You want nice, rich, law-abiding Republicans. That's what you want, and that's what you're going to rent to. Although you should rent to anyone, frankly, if they have a good credit score, not just because there have been bad Republicans. So don't let politics. I'm saying the politics of the town you're going to buy in. The property taxes. That's a huge thing right there. Conservative Republican city councils tend not to jack up their taxes like they did over in Minneapolis on me, 400%. So you want to find good Republican city council. You need to screen the fuck out of your tenants. Get a good screening service. And you only, I don't want to say you do month to month, but yeah, you have leases that are signed. You follow the rules. Please take an entire class on it. If not, go Bachelor Pad Economics. Read the chapter on rental income or rental property. But please make sure you know what the fuck you're doing, because that's a huge load of money, and you are housing the most volatile, disgusting, evil things on the planet, humans. And they're scumbags. Humans are fucking scum, all right? So you may want to even think about storage property. That's what I always thought. Like maybe storage property would be a good idea. Like that you're at least not housing humans. You're just housing shit that humans own, and so they can't really sue you that much. I would almost recommend that over rental property. But if you want to buy a house, you want to get into rental property, rent out to humans, fine. I would just rather rent stuff. The firearms company, hell yeah, 10 to 20 grand, you think you could start it up? Absolutely do it. But just like the rental property, run some financial projections. Analyze the fuck out of this thing. Just, I think it'd be fun. No, did you get an income statement? Do you know how to read an income statement? I know your wife is an auditor, investigator, whatever. Your security? Okay, do you guys know accounting? Take a couple classes in accounting. Online, don't pay for it. Learn about accounting. Learn how to read an income statement. Learn how to read a balance sheet. Learn some basic accounting, and then learn about financial projections. Have you made financial projections? That is very, very, very important. Because I guarantee it's not going to be 10 to 20. It might be 30 to 40. But even then, if it's that low, yeah, that's nothing that you can run out of your house. So do some financial projections. Make sure it's going to make money. Don't buy a ton of inventory, then you can't get rid of it. All right? Just think this one through. I mean, I can help you out for more money down the road, but this is just the quick and dirty. But if you got an idea, please, I'll be more than happy to look at it. It's better spend $200 to $300 on me to take a look at your idea, run some projections for you, Because I got 3 friends now who just went blind into business. And they didn't ask me. They never consulted me. I just went, no, I just always wanted to start this shop. And now they're looking at bankruptcy. So please spend the money up front on an expert to look at it and say, oh, hey, whoa, this is bullshit. You're going to lose your house. Then, like, shit, just watch Restaurant Impossible. Just watch those dipshits. Or Bar Rescue. Just watch those shows, all right? Have me come in first before it gets that bad. Another thing I would consider, I would even consider this before you go into rental property to humans. I would look into maybe going back to school for any kind of advanced STEM degree that's going to help you get a job, or any kind of trade school that would help you get a job. I mean, if there's something that's going to provide you a rate of return, you're not going because you're bored, but if there's something you want to go to school for, I mean, it's not going to cost you $750,000, but if there's like a skill that's going to help you and your wife get promoted in these fields, I would budget some money for that as well, because there's a certain rate of return, right? And then after all that, yeah, it's got to be put somewhere. You may not use it all, and it's got to be put somewhere, and hopefully it's going to beat the rate of inflation. Now, you got it in the S&P 500. I can't tell you where to put it specifically. I can't. It does have to be put somewhere. Now, some people would recommend inflationary adjusted bonds, where it's inflation plus a certain percent. Certainly that's a way to do it. Keep it in the S&P 500. You could certainly do that too. And the reason that might have a little bit of an inflationary hedge against it is because what drives stock values today is not the earnings that it's made in the past. What should, in theory, drive stock prices is the earnings of the future. And if we have inflation or whatever else, those earnings would be inflated because the company would be using inflated dollars. They would increase their prices, etc. So it's, of course, the stock market no longer responds to earnings or dividends. It responds to quantitative easing. I'm just saying in theory, though, because companies have assets and these assets produce profits, the stock market is typically generally an okay hedge. Not a great hedge, but it has proven to be a hedge against some inflation. I mean, look at Zimbabwe's stock market. It's gone up. Not in real terms, but it has gone up. But if you want to diversify it a little bit more, this is where you got to talk to a financial advisor. This is where I can help you. I'm not going to help you because I can't say invest in this specifically. Okay? That I will not do. But yes, you are right. You're going to have to drop it somewhere. Now, how much money is left over unless you buy a really schwank house? The silver won't knock you out. Your firearms company won't knock you out. Even you going to school, you're going to still have a lot of money left over. So, I mean, at minimum, if you have an IRA, set up an IRA, at least get the tax deduction for that. About your kid, maybe set up a 529 plan. So that kid goes to college. The problem there is, what if the kid doesn't want to go to college? So you have that issue. Also, I would talk to an estate lawyer. Especially, and this is probably what I would do, is maybe this would be your first step. This is definitely worth dropping a little bit of money on an estate lawyer, because you have an estate and you have no debts, and it's very early on. So I can analyzing and giving my personal opinion about your investment objectives or your investment ideas. Some of them are good. Just be careful with that. But I would definitely talk to an estate lawyer. Plan now. Start planning now on how to hand down your estate to your child or your future children. Because if you start out, you could start gifting your kid 14 grand. I think it's 14 grand this year, tax free. You can lower your taxes. Or your kid, you don't lower your taxes. The kid doesn't because it's a kid. There are other things that you could do now. It's better to do now 20 years in advance than it is 20 or 30 years when it's almost too late. Or one of you is dead. So estate lawyer, get your living will, tighten up your law, tighten up your legal aspects. Those are things that it's all boring stuff. I know it's boring and it's not really investing. But have a professional lawyer. I could give you the financial investment aspect, and I have an estate planning lawyer take a look at the legal and estate aspect of it as well. And he or she would certainly have some insights as well. And that dude, totally worth dropping a couple $100 on that. Absolutely. So anyway, great position to be in. You may just have more money than there are good investments out there. That's the real problem. Because, man, you got to look at price to rents. You got to look at dividend yields. And, man, there's just no rates of return of 15% out there. Just isn't. Unless you go into entrepreneurship and you think you'd really make a good go at that firearms company. So, anyway, hope that helps. Best of luck to all of you. Toodles.